So let's talk about it. Every bull cycle in crypto seems to create its own hot debates, right? Some folks swear Bitcoin is the only real asset. Others think Ethereum is the backbone of the future financial system. And then there's always this third group that digs into the more specialized projects. And when you zoom in on the payments and settlement sector, three names keep popping up over and over again: XRP, XLM, and XDC. Now, you might be asking, why these three? Why not something else like Solana or Cardano or even newer layer ones? That's a fair question, and it comes down to focus and history. While Solana, Cardano, and others are chasing broad smart contract dominance, XRP, XLM, and XDC have always been laser-focused on money movement, settlements, and institutional adoption. They're not trying to be everything for everyone. They're trying to be the backbone of a very specific but massive industry: cross-border payments and global trade finance. And before we even get into the details of each, let's step back for a second. Because if you're a retail investor, someone like you or me who doesn't have the luxury of buying 50 different coins and just holding them all, the real challenge is, how do I concentrate my bets without missing out? That's the heart of this whole conversation. Most retail investors don't have $100,000 or even $10,000 just sitting around to diversify across 20 or 30 projects. Let's be real. Most people are scraping together maybe a few $100s at a time, maybe $1,000 here and there. So the dream of building this massive, diversified portfolio like a hedge fund? Yeah, not very practical. That's why every cycle, there's this hunt for the concentrated plays. Which projects give you the best shot at outsized returns without needing to spread yourself too thin? And if you narrow it down to the payments sector, which, by the way, is one of the largest TAMs, total addressable markets, in the entire world, it's almost impossible not to land on XRP, XLM, and XDC as your candidates. Why these three? Here's the thing. XRP is the old giant. It's been around since 2012, survived multiple cycles, built enterprise relationships, and has the battle scars of fighting regulators in court. Whether you love it or hate it, you can't deny it has staying power. XLM, Stellar, is like XRP's sibling, literally, because Jed McCaleb, one of Ripple's co-founders, left to start Stellar. But instead of focusing on banks, Stellar aimed at individuals and financial inclusion. Its partnerships with MoneyGram and Visa speak to its strategy of going after retail remittances. XDC is the dark horse. It's not as old, not as well known, but it's laser-focused on trade finance, a sector that's massive but not very flashy. Think trillions of dollars in supply chain financing, letters of credit, and tokenizing real-world trade documents. So yeah, these three together cover the spectrum: banks and big institutions, XRP, everyday people and remittances, XLM, and global trade, XDC. Alright, now let's ground this in the cycle we're currently in. If you've been around long enough, you know crypto doesn't move in straight lines. It moves in cycles, hype cycles, adoption cycles, halving cycles, whatever framework you want to use. The last time around, XRP did about a 45x from its lows. Stellar didn't move quite as aggressively, and XDC was still finding its footing. This time around, the bottom was FTX's collapse in late 2022. And from there, we've already seen Bitcoin recover, Ethereum bounce, and new narratives like AI coins and res-taking tokens take center stage. But here's the key: XRP, XLM, and XDC have been lagging compared to the big headline grabbers. And if you know anything about how cycles usually work, laggards often play catch-up later on. So the real question becomes, are these three about to have their moment in the spotlight? Let's frame it like this. Imagine you're sitting across from me and asking, why should I even care about XRP, XLM, or XDC when everyone else is chasing AI coins, meme coins, or the next hot L1? Well, the answer is simple, because unlike most of those hype-driven projects, these three actually have real-world utility and institutional alignment. They're not building castles in the sky. They're trying to solve trillion-dollar problems: how to move money faster, cheaper, and more efficiently across borders, and how to bring traditional finance into the blockchain age. Okay, but haven't we been hearing that same story since 2017? What's different now? Fair. That's a fair pushback. And honestly, you're right, Ripple has been talking about revolutionizing cross-border payments for over a decade. Stellar's been championing financial inclusion since day one, and XDC's been in trade finance circles for years. But here's what's different. Institutional adoption is finally starting to pick up. We're not just talking pilot programs anymore. We're talking about XRP ETFs, Stellar working with MoneyGram to handle real remittances, Visa plugging into Stellar for payments, and XDC quietly building standards with trade finance consortia. This isn't vaporware, this is infrastructure being laid brick by brick. So that's what makes this conversation worth having. It's not about chasing the latest meme or the fastest 100x pump and dump. It's about asking, if I had to pick just a few assets to represent the payments and settlement sector in my concentrated portfolio, which ones give me the best balance of upside, adoption, and long-term viability? That's why we're going to break this down project by project. We'll dig into XRP's history, its lawsuit, and its institutional positioning. We'll look at Stellar's partnerships and its push for inclusion. And we'll shine a light on XDC, the underdog that might surprise a lot of people. And when we put all of that together, we'll come back around to the ultimate portfolio question. How do I split my limited capital between these three to get the best shot at success? That's the foundation. That's the stage set. Because before you can compare, you've got to understand the why these three, why now, and why they matter in a sea of thousands of other coins. XRP, the battle-tested giant. Alright, let's dive right into XRP because let's be real. Out of the three we're talking about, XRP, XLM, XDC. XRP is the name that stirs the most emotion. People either love it, hate it, or just get tired of hearing about the lawsuit. But whether you're bullish, bearish, or indifferent, you can't ignore one thing. XRP is battle-tested. It's been through the fire and it's still standing. We've got to start with the big one, the Ripple versus SEC lawsuit. For years, this case was the cloud hanging over XRP. Back in December 2020, the SEC dropped a bomb, accusing Ripple Labs and its execs of selling unregistered securities. The timing couldn't have been worse. Right as Bitcoin was ripping to new highs, XRP basically got kneecapped. Exchanges delisted it, US investors were scared to touch it, and the FUD was nonstop. But here's the thing, most projects would have died under that kind of pressure. XRP didn't. Kept building, kept expanding globally, and kept its community strong. Fast forward to July 2023, and Judge Torres' ruling dropped. XRP is not a security when sold on exchanges. That was huge. It didn't solve every issue. Institutional sales were still a gray area, but it cracked the SEC's armor and gave Ripple momentum again. So why does this matter? Because clarity is currency. Institutions don't touch assets that sit in legal limbo. Now, with XRP, you've got at least partial clarity, and that's enough to spark interest. Now let's talk utility. What does XRP actually do? At its core, XRP was designed as a bridge currency. Imagine you're trying to send Nigerian naira to Japanese yen. Traditionally, that's a nightmare, slow, expensive, and messy with multiple intermediaries. With XRP's on-demand liquidity, ODL, the process is simplified. You swap naira into XRP, shoot it across the ledger, and convert it into yen on the other side. Fast, cheap, and efficient. That's not just theory, it's being used. RippleNet, Ripple's payment network, has been adopted by banks and payment providers all over the world. Money is moving with XRP as the bridge. And that's why people call it the banker's coin. Whether you like that or not, it's built for institutions. Now here's where it gets spicy, ETFs. We've already seen what happened when Bitcoin ETFs went live, billions of dollars poured in, not necessarily because retail rushed back, but because institutions finally had a clean, regulatory-compliant way to get exposure. If XRP ETFs gain traction, the impact could be massive. Wealth managers, family offices, and even pension funds don't want to deal with wallets and private keys. They want a ticker symbol they can buy through Fidelity or BlackRock. An XRP ETF unlocks that. Think about it this way. Bitcoin's narrative was digital gold, and that was enough to justify institutional inflows. XRP's narrative is arguably stronger. Global payments infrastructure. If that resonates, ETFs could become a game changer. One thing people sometimes miss is how far Ripple has gone beyond just payments. Ripple has been moving aggressively into tokenization and real-world assets, RWAs. Acquisitions like Medico and partnerships that push into custody solutions are Ripple saying, We're not just a payments company. We're building a full-stack institutional blockchain solution. That matters because the future of finance is tokenization. We're talking about everything from real estate to carbon credits to government bonds being digitized. And Ripple wants XRP to sit at the center of that, not just as a currency, but as the liquidity layer that greases the wheels. Alright, let's pull back and look at performance. Since the FTX bottom in late 2022, XRP has massively outperformed most altcoins. It climbed more than 700% from its lows, and that's while carrying the weight of regulatory baggage. Imagine if that baggage fully lifts. But, and this is where I've got to be fair, XRP hasn't always been the top performer. In the prior cycle, Stellar XLM actually outpaced it percentage-wise, and XDC's run was insane, tens of thousands of percent. So while XRP has size and stability, it may not always deliver the highest percentage gains compared to smaller caps. It's the difference between buying Amazon stock and buying some hot new startup. One gives you stability, the other gives you raw upside. We've got to address the criticisms too, otherwise this wouldn't be an honest breakdown. The biggest knocks against XRP usually sound like this. It's centralized. Ripple holds a huge chunk of the supply, and that rubs decentralization purists the wrong way. Banks don't need it. Some argue banks will never actually adopt XRP en masse because they prefer private ledgers or stablecoins. The price doesn't move. People love to say XRP is the stablecoin of crypto because it's often stagnant compared to moonshot alts. And to be honest, all three have some truth. Ripple's escrow means they control a lot of supply. Banks could adopt other solutions. And XRP's price action has frustrated investors for years. But here's the counter. Stability isn't always a bad thing. Institutions don't want meme coin volatility when moving billions. They want predictability, liquidity, and reliability. XRP offers that. And as for adoption, Ripple's track record of building relationships with financial institutions is stronger than almost anyone else in crypto. So what's the bottom line? XRP is the safe bet of the trio. It's not the underdog like XDC, and it doesn't fly under the radar like Stellar. It's the established heavyweight. If you're looking for the project most likely to still be standing strong 5 years from now, XRP is that pick. But with safety comes trade-offs. It may not give you the same wild upside as smaller cap plays. If XDC is the lottery ticket, XRP is the blue chip. That's why a lot of people, myself included, look at it as the anchor of a portfolio, not the sole bet. So that's XRP, the battle-tested, lawsuit-surviving, institution-facing giant of this trio. Next up, we'll flip to Stellar XLM, the quieter sibling, the underdog that focuses less on banks and more on people. And trust me, XLM's story gets interesting when you start comparing its cycle performance to XRP's. Okay, so we've covered XRP, the heavyweight champ. But let's shift gears now and talk about Stellar, XLM, and XDC, XINFIN Digital Contract. Two projects that don't always get the same spotlight, but have some of the most intriguing stories in this space. If XRP is the noisy older sibling, XLM is the quiet twin that's out there quietly stacking wins, and XDC. Well, XDC is like the cousin no one talks about until they realize he's sitting on a gold mine. Stellar XLM, the people's bridge. Let's start with Stellar. Now, if XRP is the banker's coin, then Stellar is the people's coin. Same DNA because remember, Stellar was actually co-founded by Jed McCaleb, one of Ripple's original guys. But instead of going down the let's court the big banks route, Stellar pivoted toward financial inclusion. What does that mean in practice? It means Stellar is less about multi-billion-dollar bank settlements and more about helping everyday people send money across borders without getting eaten alive by fees. Think remittances, think humanitarian aid, think microtransactions. MoneyGram and Stellar, a big win. One of Stellar's biggest wins came with MoneyGram. That partnership was huge because MoneyGram is one of the most widely used remittance companies in the world. Now, instead of going through slow, outdated rails, Stellar lets users convert cash into crypto, send it, and cash it out again, all through the MoneyGram network. That's peer-to-peer remittance at scale. And it's not just MoneyGram. Stellar has also been working with Visa, Circle, USDC, and NGOs like the United Nations High Commissioner for Refugees, UNHCR, to deliver aid in crisis zones. This is where Stellar shines. Real-world use cases that touch ordinary people, not just institutions. XLM's cycle performance. Here's where it gets juicy. In the last cycle, Stellar actually outperformed XRP in terms of raw percentage gains. Yep, while XRP gets all the attention, Stellar quietly doubled its returns in that bull run. That's the underdog effect. Sometimes the project that flies under the radar ends up giving you the bigger upside. Fast forward to now, and since the FTX bottom, Stellar has been lagging a bit. But lagging can mean one of two things. Either it's weak or it's undervalued and waiting for its breakout. In the last few weeks alone, Stellar has been showing signs of life, even outpacing XRP in short bursts. The strengths of Stellar. So what makes Stellar strong? Partnerships, MoneyGram, Visa, Circle, NGOs, these aren't small players. USDC on Stellar. With stablecoins becoming a backbone of DeFi, having USDC integrated is massive. Low fees and speed. For remittances, Stellar is one of the cheapest, fastest networks around. But the biggest strength? Its mission. Stellar isn't trying to be everything. It's laser-focused on payments, inclusion, and humanitarian use cases. The weaknesses of Stellar. Of course, nothing is perfect. Critics of Stellar say, it doesn't have the same hype machine as XRP. Its focus on retail and aid may not attract the same institutional money. It feels like the little sibling, always overshadowed by Ripple. And yeah, those are fair points. But in crypto, sometimes being the underdog pays off. If XRP is the polished corporate solution, Stellar is the grassroots disruptor. Both have their place. XDC, XINFIN, the trade finance sleeper. Now, let's talk about the real wildcard here, XDC. If you're watching crypto headlines daily, you probably hear way less about XDC compared to XRP or XLM. And that's kind of the point. XDC isn't chasing hype cycles. It's not trying to be the next meme coin. It's not trying to launch flashy partnerships every other week. Instead, XDC is laser-focused on one of the most boring-sounding, yet insanely massive industries, trade finance. What is trade finance? Okay, let's break this down. Trade finance is basically the system that supports global trade. We're talking about letters of credit, guarantees, invoices, and all the financial tools that companies use to move goods across borders. It's an industry worth $19 trillion globally. But here's the kicker. It's massively underdigitized. A ton of it is still done with paper, phone calls, and outdated systems. Enter XDC. Their mission? Digitize trade finance. Tokenize invoices, streamline credit, and open this massive market to blockchain rails. Why XDC matters? Here's why this is big. The trade finance market has what's called a financing gap. Small and medium businesses, especially in developing countries, often can't get the financing they need to participate in global trade. That gap is estimated to be $2 to $3 trillion. XDC's blockchain could bridge that gap, making it easier for businesses to get the funding they need, faster and cheaper. And unlike a lot of cryptos that say we'll change the world, but don't have traction, XDC actually has institutional recognition. They're part of the TFD initiative, Trade Finance Distribution. They've partnered with TradeTech, and they've been recognized in World Trade Organization white papers. That's not hype, that's real-world acknowledgement. XDC's cycle performance. Now let's talk numbers. In the last cycle, XDC's performance was insane. We're talking 27,000% gains. Of course, smaller caps can do that because they're starting from such a low base. But it shows the explosive potential if the narrative catches fire. This cycle, XDC has been lagging compared to XRP and XLM. But again, that lag could be setting up a breakout. If Bitcoin dominance breaks down and money starts rotating into smaller caps, XDC could surprise a lot of people. Strengths of XDC. Niche focus. Trade finance is a massive market with little competition in crypto. Institutional ties. Recognized by the WTO, part of major trade initiatives. Explosive upside. Low market cap compared to TAM means even small adoption moves the needle. Weaknesses of XDC. But let's keep it real. XDC has challenges too. is not well known outside crypto circles. Lack of hype means retail doesn't flock to it as easily. Trade finance is boring to most people, so it doesn't grab attention like NFTs or AI coins. Still, sometimes the boring plays are the ones that deliver in the long term. XLM versus XDC. The underdog battle. So, how do these two compare? Stellar is all about people, remittances, aid, inclusion. XDC is all about business, trade finance, institutions, efficiency. Both are underdogs, but they're tackling completely different markets. If I had to put it simply, XLM is about moving money for people. XDC is about moving money for trade. And both are operating in multi-billion to multi-trillion-dollar markets. That's why they're worth paying attention to, even if they don't get the spotlight that XRP does. Remember how I said XRP was a big industrial fishing boat? Let's keep that analogy going. Stellar XLM is like a fleet of small fishing boats spread across coastal villages. They're not hauling in giant corporate catches, but they're feeding communities and touching lives everywhere. XDC is like a specialized deep-sea trawler that fishes in waters no one else bothers with. It's boring, technical, but when it strikes, the haul is massive. So that's Stellar and XDC, the quiet climbers. They're not flashy, they're not always trending on Twitter, but they're solving real problems with huge market potential. Next up, we'll bring it all together. XRP versus XLM versus XDC head-to-head, the portfolio split, and my final verdict on how I'd allocate. And of course, we'll wrap it with that CTA you asked for. Alright, we've covered a lot. We started with XRP, the heavyweight built for institutional settlement. We looked at Stellar, the people's champion of remittances and inclusion. And we dug into XDC, the boring-sounding, high-potential sleeper focused on trade finance. Now the big question, if you're an investor, how do you actually approach these three? XRP is the obvious anchor. It's proven, it's battle-tested, and it has the biggest institutional momentum. It already survived the SEC lawsuit, and now it's positioned as the leader in on-chain settlement. If I'm building a portfolio around these three, XRP takes the lion's share. Allocation, 50%. XLM, the grassroots play. Stellar is smaller, scrappier, and more community-focused. It's not going to compete with XRP for the world's biggest banks, but it doesn't need to. It thrives in its own lane, remittances, humanitarian aid, and financial inclusion. Historically, it's even outperformed XRP in some cycles. Allocation, 30%. XDC, the wild card. XDC is the true wild card. It's tackling a $19 trillion market, but hardly anyone outside crypto circles talks about it. That's both a weakness and an opportunity. If trade finance tokenization takes off, XDC could see explosive upside. But it's also the riskiest of the three, so a smaller allocation makes sense. Allocation, 20%. So the way I see it, the balanced approach is 50% XRP, stability, proven adoption. 30% XLM, growth, grassroots use cases. 20% XDC, asymmetric upside. That way, you're not all in on just one narrative. You're diversified across institutions, people, and trade. Crypto moves in cycles, and these three, XRP, XLM, and XDC, are not just random altcoins. They're solving trillion-dollar problems, each in their own way. One focuses on banks, one on communities, and one on trade. Together, they form a pretty compelling trifecta. If you've been watching from the sidelines, now's the time to pay attention. The crypto market doesn't wait. It moves in cycles, and the ones who prepare early are the ones who win big. XRP, XLM, and XDC aren't just coins. They're the infrastructure for the next era of global finance. Don't just scroll past and forget this conversation. Start digging, start learning, and decide where you stand. The future of money is being built right now, and you have a front row seat. The only question is, are you going to take action?